Howdy, everybody. For anyone that is in stat, I will I'll have audio going through the premium stage just because let me oops. Fix that. Just so you can listen to audio if you're just looking to do that. Amu the put bull, that's funny. All right. In the house. So I don't have anything specific to go over. So we're kind of relying on you guys. What do you guys want to specifically talk about? If you guys want me to just ramble on, I could probably fill it for a half hour or an hour. But obviously, I'd rather answer some specific things from you guys. I'll give you guys a couple minutes to think. Also, our guest, I don't know. I haven't heard anything back yet, so we'll see if he's ended up in here or not. I'm just here to see Big O get roasted. Well, all right. This is what happened. So I sent him a message. I just said, "Hey, it'll be around 8:30 CST now, maybe a little later. But it's either we're talking about price action or I'm cutting the stream off. So we'll see. I wanted to see what he had to say because I don't know. It's been a year. Maybe he learned something fancy and new that we can all learn from. But guess not. LOL. Yeah, right. All right. So what I will ask you of you guys, if you're in, I know we have the free chat and stat, and then we have premium chat and stat, and then we have the YouTube chat. Please stay in the YouTube chat. Always be open minded. See, like that's where I'm at though, because I still have so much time ahead of me. There's no reason to be super close minded with everything. Like, I'm willing to have my mind changed about strat stuff and ICT stuff, which is very similar. But let's friggin' go. Yeah, I'm still all sandy. Like I'm gonna be up until probably 11, especially if this run's till 10. But how's everyone doing? Looks like we're having some people join. All right. So everyone that's joined for broadening formation talk, we will quickly define what a broadening formation is. So we don't need any candlestick chart. A broadening formation is simply creating a low, a high, a lower low, and a higher high. This definition, this is a broadening formation. And when do ICTers use broadening formation? So I'll talk on that once we just define it, because we need to know exactly what we're talking about. If we don't know what we're talking about, then we can't talk about it, right? So broadening formation is simply defined as this. You just need a high, lower low, higher high. And with that knowledge, we know that if we make a high and we make a lower low and we start seeing any reasons of reversals, it could be a strat reversal, it could be order blocks, anything, we know we want to target that new higher high. And once this has formed and we've made the broadening formation, now we know if we get reversals, if we start falling back in, losing back below this previous high, we'd want to target this low. So a broadening formation, simply put, is just higher highs and lower lows, which I'm sure you guys all understand at this point. So now when we're looking at candlesticks and drawing broadening formations, this is where everyone gets so mad because it's completely subjective, and this is how you make it non-subjective. So depending on the time frame you're looking at, it will be different. We need to keep that in mind, because if I'm looking at this time frame and we're here, it's like, okay, well, am I looking at the price right now, or am I looking at the price as a whole? And if I'm looking at the price as a whole, it's like this is the highest high, and we draw all the way from right to left. it took out all this stuff. It's the highest high, so we take the other highest high, we draw it to there. Now it's like, where's the lowest low? This would be our lowest low, and it took out all of this stuff on the left, so we would draw it to here. And the importance here is, depending on how you're framing it, you're going to be looking at it a different way, because if we're looking at this broadening formation here, it's like none of this stuff matters, because this is a lower low to here, and these are higher highs, right? That's where understanding we're coming back through from lower lows to higher highs, this will expand. We don't expect it to just sit in here and do that over and over and over. Eventually things do expand. So we need to keep that in mind. But very important, you need to know what broadening formation you're drawing and understanding. So, okay. The only thing Big O said that I do prefer my BF lines to have 3 connecting points, not a deal breaker though. Yeah, and so 3 connecting points, do you need 3? No. But having the 3 connecting points, then sure, you could probably trade off the line if you're looking to do that. But it's really more about understanding. It's not even about the highs and lows. Like Sarah says with her finger doodles, it's like you can see we created a try here, and then yes, it made a higher low, but it goes and makes a higher high, lower low to that low, so we've now made a new try, and then we come back through all of this try, and then we come back through again, and now they're trying to come back through. But continuity and stuff can go and change that, where we make higher lows. We know that happens. But it is not the line, like Sarah's saying. So understanding just that we make lower lows and higher highs, you can see how that all plays out in the chart here. And what the broadening formation is really encapsulating, if we're drawing from right to left, you draw from right to left. The highest high over here took out all this stuff. If we're drawing from right to left, the lowest low over here took out all of this stuff. It didn't take out this low. It took out this low right here. When we're drawing that, all we're saying, and this would be like if we're just drawing it from way back here, or if we're just looking at this high, this is what we're looking at. All that's saying is from this low to this high, this is an outside bar of all this stuff back here. The same way that from this high to this low, all of this stuff is an outside bar of everything to the left of it within the broadening formation. And that's the same way that this stuff right here is all outside of everything to the left of it if we were to start drawing back into this thing and look something like that. So all we're trying to pick out is those compound outside bars, because then we know if we get reversals up here and we keep time frame constantly to the downside, we know where the other side of the range is, because that's how you gauge where price is going as long as price doesn't reverse. Because once price reverses, then it's no longer going there, right? And that's where people get really hung up, because if we're looking at a broadening formation, it's like, okay, if we're looking at it like this, it's like, yes, this makes a new lower low, but it doesn't reverse. And that's where people get mad, because it's like, oh, Alex, it's supposed to bounce off of this broadening formation line perfectly right here every time. It's like, no, it's supposed to give you potential reversals off of here to trade up back to this high. If there's no reversals, you can't trade it. The same way, if we came up to this high and we held that gap, it's like no one's looking short, because yes, we made the new high, but we're green on the day. We can't short a green day. So it's not just the broadening formation. You have to have a strategy within that. And that's where we say as straters that is it fair to say it's about liquidity? At the essence of the broadening formation, that's what it's all about at the end of the day, is like they just want to fill orders. And it's like if there's stops up here, is there stops up here? Who knows? But what I do know is if anyone's short in here, they're probably going to want to close some of that position, which is going to give liquidity or create an area where a lot of people are closing positions. The same way, it's like you have this big up day. It's like a lot of people are going to be buying in that because we took out this high, this high, this high. It's like when all those highs get taken out, a lot of orders are getting filled. We know that's just how it happens. So you can say it's about liquidity, but at the end of the day, it's just our highs and lower lows. But with that, you can't just draw the try and expect everything's going to be willy-nilly perfect because you drew a broadening formation. It's like, no, you have to have a strategy of how you're going to manage your risk and take entries, and what does an entry look like to you? What does a reversal, or what does it look like when that entry stops working? You need to define that too. And it's like, well, if we're coming back through this broadening formation here and we're expecting this high to get taken out, do you hold into this expecting a higher low to this low? Is that part of your strategy? Or do you let this go and TTO all these guys? And then do you just take a 2-2 reversal back to the upside? Right? So it's not specifically the try is the end all be all, but it is incredibly important. And the major gripe everyone has is just that subjectivity, which can be mitigated if you're not looking to only incorporate specific parts of price. If you're looking from right to left, it's like, if we're just looking at all this price action here, this is your highest high, and you can draw it back to here, yes. And our lower low, where was the last place we made a lower low? You could draw it back to here if you wanted, but since we took this high out, I would be looking down here. I would want to draw it from here to here if I was drawing it just objectively looking at this chart. Now, if we zoom out, it's like, well, now we know where the actual try is, right? Because you can see we made a higher high, a lower low. Now we've made that lower low. We'd want to see that high taken out. And if we go to QQQ, it's already done that. And if we're drawing right to left when all of this price action is going down, that's your broadening formation. And you drew it from here to here, and you never had to redraw it again. So it's very important to look right to left. And if we zoom in on price, of course the broadening formation changes, because if we're looking at this price action, it would be something like this if we just cut that out. So incredibly important to know that you're framing price, you're just identifying those compound outside bars the same way it's like all of this stuff is outside of everything else in the left of this try. So as long as that's the case, we know if we come back in without reversals, we can try and target this low. But with time frame continuity and other things, trend may not let it happen. You can see daily reversal against. Would it make sense to put a stop or mental stop on the outside of the broadening formation where you enter on a reversal back through the try? So it's up to you. I would suggest back testing it because you want to know that whatever idea you're creating isn't false. So that's important. But if you're saying, for like, if we are zooming out just for an example, it's like, well, that high took out everything besides that high here. So we draw instantly to there, this low to here. So if you're saying we get a daily reversal here, a 3-2, which I wouldn't take, the 3 or the 2-1-2, it's like, okay, sure. If you're saying take this or whatever your entry may be and throw a stop up here, you can do that. But part of the strat, at least the way that we want to trade, is we don't want to be holding things that reverse back up here. Because we know unless it reverses back down, it's going to 2-2-2 continuation to that upside. This explains why I see some only draw broadening formations off 3s. The 3s are important, and the reason they are is because it's done all the work for you. Because you don't have to identify these 2 bars as being a compound outside bar of these 3 bars here. Because it's already a 3. It already happened. So like this is a 3. Anywhere below the low of that 3, that's 3-2 expando, which you can see inside and down, 2-2-2, and then they reverse right here after taking liquidity. And so the 3s, it just gives you the try, because if we're looking at it on Qs, here's another 3. You can see if we draw out the try, it goes 3-2-2, expanding the 3, and we draw from right to left, so it's like this low right here only took out that low, and this is still the top of the try. You can see once we go daily reversal, instantly we'd want to target this just on the lower time frames. Because now these bars here, we go outside of all those because new highs, new lows. I find that there's usually time frame continuity conflict at bottoms of the try. So the conflict, I'll get to that in a second. Someone just said the same question, so I'm just going to read that one. When is it okay to enter on a reversal against time frame continuity? There's a couple ways you can think of it. So the best rule I could come up with for you guys is, first of all, we know we don't want to let losers go against us. So if you're trying to catch the bottom of the try and it's just not working, just take the stop. So number 1. Number 2, you need to take into context that daily candle, because If we're going to reverse monthly continuity or weekly continuity, it's going to start on the day. And number 3, the last thing, is if we're really far from reversing any of that continuity and we're not at exhaustion risk, meaning it's like if we're looking at Qs, let's say the monthly opens like way down here or something. If we're on Qs and we're looking at the monthly open way down here, when we gap up, are we at exhaustion risk taking out this high? It's like, yes. It's like, okay, well, knowing that, this is a short. And I know it's a short because we took the 221ers on the lower time frame when we gapped up here. So we traded this. But understanding that we're at exhaustion risk, that gives you it. And you can see daily continuity agrees. Now, the difference, if we go to the bottom of the try, if we just draw out the lows here, it's like when this day gets down to the bottom of the try, can you try and take an hourly reversal from down there? For sure, because the hour could reverse the daily continuity from exhaustion risk. But if this is happening like the middle of the day or something, they're coming and taking out exhaustion risk and they're that far from the daily open, it's less likely to do so. So keeping those stops tight, you can try and trade off the bottom of the broadening formation, but you have to reverse that daily continuity. And if you're taking a 2-2 on the hour or something, like if let's go and look at it. You can see on the hourly, can we take this against continuity? Sure. Does it work? Yes, it goes to its magnitude. But you can see the next hour, they just come in and crap on it. Why is that? Because this 2-2 on the hour did not negate the daily open. They're still selling on the day. So this is 1 hour of corrective activity. New hour opens, and you can see they're done. So it's 1 hour corrective against all this full time frame continuity to the downside. The reason that happens is because we didn't negate the day. There's no chance we're negating the week if we're not negating the day, because the week open is way up here. We did go outside on the week, but if we're not negating any of those opens, then they're still selling on the day, and they're still selling on the week. And you can see they're still selling for potential outside month. So as long as you follow your time frame continuity, starting with the day, if you're trying to trade off the bottom of the try, start with the day, because the day can negate the week, or at least make a hammer week or something like that. Start with the day. If the day can't change, then you probably aren't going to be able to do much with it. Because if the day can't change the week and the month, then you're not changing anything. It's still selling. So if we go back to the daily, if we're going back down, we'll go back to when this Q's gap down and everyone was freaking out. Like they thought the world was ending down here. So if I were, if I were framing this out, if we're just zoomed in on a daily chart, it's like, okay, where's our daily range? We're talking about this day here if we go to replay mode. So, okay, where's our daily range? Well, take the rules. How do we draw the broadening formation? If we're not even looking at this day, how do we draw the broadening formation? It's like, okay, well, we start from right to left. Where's our highest high that took out everything? It's like, well, click your highest high. It's like, okay, drag your cursor all the way to the left. You can make it flat if you want. It's like, what's all below that? It's like, well, this is the highest high below that. Boom. Objective broadening formation. Done. It's like, okay, where's your lowest low? It's like, well, duh, it's right here. It's like, okay, draw it all the way left. What did that take out? It's like, well, took out all of this stuff. So we just draw to whichever low we feel like. And ideally, you don't want any price sticking out of the range. The broadening formation can look like this. It could be 1 penny. Doesn't matter. As long as it's slightly lower low, even by a penny, broadening formation. It's like, here's your objective try. Now, let's go down to like a 30 or something, if it'll let me. It's like, okay, here's your 30 minute. You can tighten up those lines if you want. So here's our objective broadening formation. No guessing, right? Now, what happens? Boom, gap down. What do we know about gap downs? What do we know to be true about gap downs? Above that daily open, we look for outside day. Why? Well, everyone who sold short, if we go back to that daily time frame, it's like, everyone who sold short here, they're still holding their shorts. What did the market do? It gapped down. It's like, okay, well, the market gapped down. What do we want to do? It's like, well, take our profit. What the heck? The SPY just gapped down 2.5, or the Qs gapped down 7 points nearly. It's like, no shit, you're going to close some shorts if they've been selling since Thursday and then Friday and then Monday, Tuesday, Wednesday, coming into the latter half of the week. And you had this one over here. So a potential 1-3 rev strat, which gives you the magnitude to right here. So we know gap downs for sure. If it's green on the day, we want to buy it. Now we go on the 30. Where's our reversal signal? It's like, well, we can go 2-2-30. We can be playing off the oneers down here. When the day goes red to green, we can long, whatever it is. All we want to see is, can we get back above yesterday's lows? Because that opens up the possibility for outside day. And as long as we're above daily open, you can do that. So where would our stop go if we're looking at Qs right now? It's like, well, we're playing off the bottom of this try. Daily continuity, again, focusing on that day. This is the thing that can go and change weekly continuity, because the week right now, we opened, what? Monday's open. Let's see it. Monday's open is way up here. Put it in blue. So Monday's open is way up here. Daily magnitude's right under Monday's open. So we have the chance to get really close to that week and negate it. And we know we're gapping down. We want the potential 3. So if we're taking a 2-2 reversal on the 30, can we have wider stops trading off the bottom of the try? For sure. You can use the low of the try, because we're expecting low day to stay low a day and low of the try. As long as we are green on the day, which if we go 2-2. And you can see no reversal. They just went and TTO'd everyone that bought. And then boom, they go to fill up that gap. And now it's like, once that happens, that's when your winners, you move your stops to break even. Done. Because now, as long as that day's green, you go to the week. It's not really going to show me. What's the week doing? It's trying to go hammer counter shooter. What's happening on the weekly time frame? Well, objective broadening formation. Where's your highest high? Boom. It's like, draw it to the left. What did it all take out? Took out those highs. Boom. Where's your low? It's like, well, that hammer week, we're really far from taking out that low. It's like, what did that take out? Everything above it. Right here. Here's your objective broadening formation. Now we have hammer counter shooter week. That's where it's like, well, you can try and add to it if that hammer goes in force. On the month. Now you have monthly hammer forming as well. It's like, you can play it back up to there, because what did it do? 2-2 reversal on this month hit its magnitude. These bars here are outside of this bar. That's why that's its magnitude. And now it's trying to come back through to go 3, which if we play it through, you see it takes a while. They did hold the low of that try. And this is why your inside year is important to know about, because look at how much of a choppy mess this has been. And now they go to the top of your monthly broadening formation, which you can see right here. Like that. We go back to the week. Go back all the way to the daily. It's like, when it gap down from that daily, yes, you can keep your stop down here if you want, but since we know it's inside year, that's why you get all this choppy mess. You don't get the really straight lines. So if that didn't answer your question on the broadening formations and the stops, if you're really trying to like nail the lows, which I wouldn't, in this market, it's like, personally, are we bright green on the year? Yes, but we're already halfway through the year and we're still inside. I'd be really careful, because we're at the highs and we're inside. And understanding that halfway through the year we're still inside, you need to be careful about that, which is why your month, you can see, turns into a giant mess. Just keeps the stops tight. Yeah, always. That's why it's in my bio. Tight stops. And people, I like Big O, he loves to make fun of me for it, but I will take tight stops any day of the week. If I stop out of 100 trades and lose $600 or something, sure. One winning trade, and everyone's seen it. It's like, one winning trade, you can eliminate 100 losers if you keep them tight. And the conflict at the bottoms, that's why we don't really aim to catch the perfect low of the try. You can, but do you want to hold through 3 months of sideways? You can. Not my cup of tea personally. Like, I would rather, I'm not saying I did hold this, but it's like, I'd rather be looking at PayPal. It's like, well, if I'm short up here, 2, it's like, once we see those 2 candles, you can hold the rest as long as you want, as long as it's not back up here. And your stops can be in profit, and it's obviously selling. It's like, I'd prefer that any day of the week over trying to catch like the low of the try here and hold through all this mess to potentially take that high out, which you can see it gets stuck inside and then makes an internal try. and goes outside of that and still stays inside, and then goes outside of these candles here, getting stuck inside of all this. And that's where your chop shot comes in, because you're not taking out those highs and lows, you're just getting stuck. New high ground week after week. I guess are you talking about all-time highs, or are you talking about cues right now, like on a monthly basis, where we don't have any pivot targets left? Like if I'm looking here on cues, it's already exhausted, but it's still at the highs. The daily hasn't reversed yet, so they're still trying to continue until they reverse. They're still going, right? So tomorrow they can go continuation or they can go reversal, either or. So always hitting all-time highs. The way that it works, and the way it works in all-time highs, you'll notice they will grind. You'll see these really tiny little day candles, right? And this is why I loved trading the COVID run up, because it was just so freaking easy. It's like grind, 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 and then what? It's like, well, here's a 3. What do we know about the 3s? That's a broadening formation. So that means it went outside bar from here back up to the highs. The new day opens. You can see 3-2. When it's grinding like this, it doesn't quite create a PMG, but it creates clustered pivots. So what we do is we want to short it back down off of those highs, and you'll see it comes in, it takes out 1, 2, 3 pivots, and then look at how far this one is. This one's so far down, there's no chance. They gap it down inside bar, and then once this reverses, you just take it right back to this high here, and then you do it all over again. So you can see grind, 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 gets into the highs, another 3, another 2, except it gapped down, goes hammer. That hammer gapped and it didn't do anything. And then more gaps here. I think SPY would almost be better just because the gaps aren't there, but you can see more grinding into all-time highs, and then boom, they take out a ton of pivots, and then they just reverse right back to the highs. And they do it over and over and over. You can see 2-2 takes out a pivot, and then 2-2 back up, all-time highs. Let me go all the way right. You see another 3, 1, 2 with a big magnitude. You got more pivots to take out. They go 2-2 continuation, and then boom, reversal back to the highs. And then grind into the highs, and then look at that. Nice big pullback, and you can see, go back to the week. It's like, what was the week doing this whole time? It's like, well, it's just grinding into the highs. It goes up. You can see the gap up on the week, potential 3. It goes outside, comes back through the try, and then what do? They come back to the low of the 3, the low of this 3, and then all the pivot machine gun down here. We just draw out all your clustered pivots. Doesn't get quite all of them, but then inside and up hits its magnitude, and then 2-2 reversal again, back to all-time highs. Then they grind, reversal, take everything out, and then back to all-time highs. And you can see this, they just really grind it. They stop them out on this candle. You can see hammers back to the highs, and then boom, stop them out again. And it all just comes right off of those highs just to stop people out, and they'll just kind of suction right back up. And when you're trading into all-time highs, we back to like a daily. I think SPY is almost a better one to look at. It just doesn't gap quite as much because Q is just a little more volatile. But when you're trading against all these all-time highs, all you do is you just wait for it, because when we're talking about broadening formations, we know the high of the broadening formation. If we're just looking at this chart, it's like, here's your all-time high. If we go back to like, we'll go to here. It's like when we're grinding into all-time highs, this is the top of our try. Where's the last lower low it made? You could either draw it here, or you could draw it here, which actually you can't draw it there. So I'd have to draw it from here to here, or the small daily one, either or. But what we're really looking for is all of these pivots to get stopped out when they get clustered together like this. And then since the monthly continuity is still up there and we're just expecting to grind, once they stop everyone out, you can see they gap down. They actually did go and stop these guys out here. Gap down, and we know a gap down, we want to buy it. It's like we just target right back up here, because I don't know, was this actually slightly lower? I'm not sure. I think it was. It'd be something like this. But we know once we come off the all-time highs, if we're going to still grind, the second we start getting reversals down here, we're going right back up there. And when the indices are like that, you don't really want to trade into these all-time highs. This is when you want to start looking for the things like, if we go and look at See, Tesla's really getting at this month inside in green. This is where you want to look for the things like going back into all-time highs. You can take it on Tesla, like really strong things where if you go to the year, they're really green. But this doesn't happen very often. You have to find the ones that are nice and green and just chase them all year. And you can see we had the 3-2 hammer in force all year. So the yearly signals are super important when you're going into all-time highs because you have all year to chase after it. Even though there's no pivots over here, as long as it stays nice and green, you're good, right? If we go to the month, you can see all year they had inside month and up. This is where they go and stop them all out, and boom, right back into all-time highs, inside and up. And then was that the beginning? So this is where 2020 ended, and you can see the first half of 2021, they stay inside and stuck. And then they finally start coming back through once they change yearly continuity right here. And you can see they start buying again into the end of 2021. And then we go outside, or at least you can see if we draw from right to left, if we're looking at broadening formations, this is why exhaustion risk is important. It'd be something like that, which boom, they go and take out everyone. Now we draw from right to left again, here to, it's like, what did it all take out? Right here. It's like, here's your try. If we reverse up here, we'd have a high here, here, and here potentially. But you're going to have to get that quarter in force, and we're getting to the end of the quarter, so it'd be inside Momo hammering up. And you're also potential outside year, so it's like, you could do it on Tesla. If they can put that quarter in force, they could do it. It's just a matter of if. You'll have an inside month to trigger it too, and you have like all the pivots set up. I do like that one into next month if we can close up here. But I hope that answers your question. You really just, you let them TTO on the daily, and then you just smack them right back up. And to be honest, it's a lot easier trading because you know everything is going to go back to the all-time highs. So you don't have to have like if we're looking at price action right now, it's like, well, maybe we go back to all-time highs. I doubt it. Not this year. We're inside. But can we just go and take this out and probably tank? It's like, well, either or. It just depends on the reversals. When you're trading into this stuff, it's like a lot easier because you just know hammer month, 2, 2, 2, 2, 2, continuation, stop them out, continuation. And this is that new yearly continuity where you get the potential 3, and then boom. Do you swing more in those environments? Yes. You can swing in these environments. If you have a month and a week in force, you're good to go. But in those environments, yeah. Like, I wouldn't be wanting to swing much SPY. You can if you have the week in force. I swung it last week, and it's like, why did I swing it last week into Friday? Because you had 3, 1, 2. That's your candle pattern in force, and it closed in force on Wednesday. So it actually swung into Thursday, my bad. But it closed in force on Wednesday. So daily close, they're in force on the week. So that's in force overnight, and it's in force until Friday's close. So you can see, boom, Wednesday goes and takes out weekly magnitude. So you can swing if you have it in force overnight, but if you don't, then no go. So Dixie right now, look at this thing, stuck on the year. I was hoping we'd see some more stuff occur, but now, what did we say last month? We'll actually look at UUP because this one was a little bit more what I was talking about. Actually, UUP kind of screwed up because it didn't have the pre-market sessions. But I talked about UUP. I said, if this 3-2 goes, then we'll melt the indexes. But you can see it fell back in to go and take out this low here, which did it do it? No. Because time frame continuity and signals. This is your reversal against on the month. That's why you can't just trade the try. You have to have the reversals and continuity. But if we go to Dixie, you'll see it actually did do that. So if we're looking at Dixie right now, this was our try before. Failed this side. Comes to take out the low by a penny. Which we go and quickly zoom back down here. You can see it takes out by a penny. It's like bottom of your try. Now, since we're inside on the year, what do we expect for Dixie? Well, draw from right to left. When you're inside on a higher time frame, this is where price discovery starts over. So this is your try, and I don't think we're... is this our try? Yes. It's like, I don't think we're getting out of this try for a while. We might chop around in here. We could just go for this high and fall back in. But I don't really think we're probably not getting much more range than this unless we see some expansion on the higher time frames. And reason being is because when you go inside on a higher time frame like this, you get smaller ranges, and when you get smaller ranges, you get smaller broadening formations because they have to restart that price discovery. So if we go to any of these inside years, we'll go to, like, you can see this one over here. It's like almost guaranteed there's going to be a try down there. Let me see if I messed it up. It's like, well, get stuck inside on the year. When did the year start? 79. So you start, you can see outside on the month, 79. I don't know if this went a penny below or not. I don't have my thing up here so I can read it. But you can see it goes inside, new high, new low. And if we're drawing broadening formation from right to left, it'd be like this. Like, this is your inside year, right? Stuck. New year opens right here. And you can see all of this small broadening formation. New year opens. If we get yearly continuity up, where do we go? It's like top over here. Because we're looking for the other side. So potential 3 on the month once we go 2 down in green. If it stays like that. New month continuity goes enforced. 2-2 reversal. Magnitude hit. You can see no reversals against. Boom, top of the try. That's inside and up on the year. And then that expands. You can see gap up on the month. Can they try and close this month, hold back above that try? Or are they going to fall all the way back in? There it is. And now we'd redraw from here to here. Come all the way through again. Let's see. Gap down, goes green. Can they go 2-2? There's 2-2. Magnitudes hit. Can they continue on the next month? Yep. We'd actually draw it from right to left. You can see they're coming right back through that try again. And get it drawn out correctly. But here's your expansion. This is what I wanted to see on this month back here. Can it hold above? This one held above. Hammer, that's an add back into that. And they take off. So those inside bars on the higher time frames are important because when you're stuck in it, you get really tiny range. Then you can see, boom, big range. Then they go and stop out anyone who got long into that, which is why it's like, can you buy the bottom of the try and just hold your stop there? Yeah, but when you get reversals against you in continuity, potential 3 on this month at 50% rule, you get a little scared. And then what happens? You get 2-2 reversal. That doesn't really do much since it gapped. And then here's your monthly 2-2. Here's a TTO to go back to the top of the try. And then this is your expansion off of your hammer. That just goes. Yeah, this video will be on my channel, of course. But now, given Dixie, if we go back on the year, this is how I'd be looking at it. We're stuck between these two highs, and we're stuck inside this yearly range. So we're likely not going to make a new low or a new high to this. So just knowing that, we identify our range. Do we have any broadening formation over here? No. We have a higher high here, slightly lower low here. So this is our range. They can go take out these highs as long as we don't get monthly reversals back down or weekly back down. But I wouldn't expect any of this to get taken out for a long time because this is probably going to get stuck inside until either we got like a 6 month. It's like, can they 6 month 2-2 it back up to try and go nice and green on the year? Maybe, but they'd have to stay green. And why is that? Because if we go on the week, that's your 6 month 2-2 reversal, right? Which is why it's important to know your higher time frames and your broadening formations, because 6 month 2-2 reversal, that fails and goes 3 if we're coming off the top of this try. So more important to have a strategy than it is to just know the broadening formation, although the broadening formations are helpful. So what do you do with something like F with a Dorito look? So like this. So this is where you can call it, Sarah draws them out like this, and it's the same idea. It's like, okay, well, drawing from right to left, where can we not draw through any candles and make, or you can draw left to right, it doesn't really matter. But where can we not draw through any candles and just show that it's consolidating? It's like, okay, sure. You can draw it like this. But as stratters, do we know that we don't really want to be taking this break down unless, do we have an actual signal on the higher time frame? It's like, okay, 6 month shooter potentially, if we can take the year down. But as straters, we know if we fail that, we are coming all the way back through. And why would that be? Well, we go. All right, OBS disconnected there. I apologize. But if we're looking at forward, you can draw out the narrowing if you'd like. The way I like to think about it is like, okay, we're stuck from here to here. So until we take out either side of these ranges, you can trade this, but we can't expect this high. We can't expect that low because all of this is now stuck inside. So when that occurs, we know we get new broadening formations, right? So if we're looking at it, we get stuck inside from here to here. It doesn't really make a new try here. Goes to new lows. You see they take out the lows. Goes to new highs. They take out these highs. And this is where you continually get more stuck because we didn't take out this, so it's like we're probably not taking out that low. Why is that? Because from here to here, take out the low of the broadening formation, go all the way up here, take this out, but don't get that high. We're not going back to that low for a while because we're falling back in now. We're looking at this price action. From this high to this low, this gets stuck inside. And what happens there? It's like, okay, we make a new low, we make a high, we don't take that out. New lows again, we're still stuck inside from here to here. And you can see they're just getting continually tighter. So I don't like trading these personally. You want to trade things that are not stuck inside of a previous price leg because all of that is stuck. So if we're drawing a broadening formation on it, that's where the higher time frame inside bar, like what we're looking at, you look for lower time frame tries, which if we're looking at it, forward, we zoom in, it's like all-time highs right here. What did that all take out? From here to here. All-time lows right here. What did that take out? From here to here. Notice how this low didn't take out that low. So it's not like we're drawing this big try. We're going to come and take out that high. We're stuck. We're stuck in here. So we get reversals back up. We run into some exhaustion, hitting our higher time frame continuity or higher time frame magnitudes, where if we're looking at a weekly, 2-2 reversal week, magnitude sits here. Go on the month. You can see inside month and up, it hits its magnitude, doesn't take out the top of the try, which is why it's important to have a strategy, not just the broadening formation, because knowing your inside month and up is exhausted right here. What does that tell you on the day? Well, we have a shooter day, and we're exhausted on the month. It's like, okay, earnings, yeah, but is that surprising that they're exhausted and they gap down on earnings to stop out all these guys? Not really, right? And you can see now, failing that side on the month, they go and take out the other side of the range, which is why it's important to have a strategy and not specifically only be looking at, if we made this new low here, we have to go and make this high. It's like, no. As long as we don't reverse, we can do that. If we're exhausted on the month, are you going to hold calls right here expecting this new high? No, not at all. Never. So important distinction to make, and that's the thing that people never do. And if you're an ICT person, so it's the same thing, because we're hitting this pivot, and now you have a reversal candlestick. It's like, knowing that, why would you hold the longs? You wouldn't, because if we go down to a lower time frame, I don't know if it'll let me go on like a 30. Yeah, it's like we go down on a 30 minute. It's like, well, what happened? We took out those higher time frame pivots. Bearish order block just formed here. Does it hit it? I'm guessing not. It doesn't. But bearish order block, bearish for value gap, whatever you want to call it, and they reverse. Is there anything to be long against over here? No, not really. If anything, there's low resistance liquidity runs sitting all right here. May 18th price action. Is that on SPY? May 18th. Oh, how did I flawlessly? Because of weekly magnitude. That's what I was trying to explain on SPY. Because, okay, why did I swing long from this day? Well, we got onto the hour. Where did I enter that day? I actually didn't get it down here. I entered when this hourly continuity came back in. Why? Because we had red hour continuity. Did that change anything on the week or the day? No. Day is bright green, week's bright green. Do we still have time left in the day? Yes. It's like, okay, where are we longing? When this hour goes green, this is full time frame continuity. And if we go to, do I have time frame continuity? I love TFO's time frame continuity indicator. Beautiful up here. It's like, okay, we have time frame continuity. What do we need to swing trade? Day and week. Okay. Day, week, hour, green, right there. That's where I got long off of the weekly trigger. If we're going to ES, knowing that SPY has weekly magnitude up there, where's your broadening formation? Where's your time frame continuity? So this is how you frame futures in the morning. Where's everyone's stops? Where's the other side of the range? Where's the broadening formation? Where's the time frame continuity? If we know SPY's magnitude is up there, and we know everyone that long this futures leg up has stop losses down here, below this low, whatever it may be, below these lows here. If we know those three things, when the New York Open happens, we want to see a TTO. Why? Because New York Open, it's like a high liquidity time, whatever you want to call it. They want to fill orders and then go to wherever they're going. So if our broadening formation, we draw from all-time highs. So if we're framing this price action right here, where's the highest high? Boom, right here. Shift, draw it to the left. What did it take out? It's like it took out everything. There's the highest high. So now all of this price action stuck inside that try. Where's your low? Where was a new lower low formed? It's like, well, can you draw it to here? No. Why? Because we took out this high here. And if we're looking at the range, if we're identifying two sides of the range, this is where the box setup comes into play, or like why it's such a cool tool. From this high to this low, this is a range, right? And now we made new highs. So we have high, we have low, and now we have higher high. Was this a higher high? Yes. Did it reverse? Yes. If you kept a stop up here, you got stopped out. Big whoop. So this is our range, highest high over here. They never made new lows besides this low to this low. That's just where I drew it. Or you can even, so from this low to this low. That was the only lower low they made. Because all of this stuff was stuck inside of this price action here. And again, from right to left, we identify that high. And we just pair it to that low. Just makes sense. So now we know they want to stop people out. We know that magnitude sits way up here somewhere. We know broadening formations expand in the direction of continuity. So where would they stop them out? It's like, well, bottom of the try. And do we need to see it tap the low of this try? No. This is the bottom of the try. A penny below that, still a broadening formation. They can tap the line if they want to. That would have been preferred because it looks pretty, right? Now, if we play through, where was I short pre-market? Well, hourly continuity. We need an hourly reversal at the very least up here in order to negate daily continuity. Because the hour, you get an hour of time to try and negate the day, which I don't know exactly where it opened up. If we use ICT's midnight open, it's like right here. So we have an hour of time with the hourly reversal to try and change that day from green to red. There's your hourly reversal signal. Bottom of the try gets hit. And then what do we know about time frame continuity? 1 hour of selling does not mean anything if they can't keep that day red. So once the new flip happens, it's the bottom of the broadening formation by a penny, a couple pennies. New flip, we want to see what happens. It's like, okay, makes a new low, goes potential 3. A potential 3 that doesn't go 3, or if that fails, turns into a 2-2 reversal. Here's 2-2 reversal off the bottom of the try. 2-2 reversal off the bottom of the try to the top of the try. Done. And if we go to strat numbers so people can see it, for those that aren't accustomed to it, all a 2 is it, let's just identify, this is the previous candle's range. A 2 takes out the high or the low of a previous candle. A 1 is a consolidation. It goes inside of the previous range. And a 3 goes outside. Oops. A 3 goes outside of the previous range. So that's what the numbers are, and that's what the reversals are. Because a 2 down, 2 up, there's your reversal. So that was the reason for the long. And then if we go to SPY, you can see all it did on SPY was go 2-2 continuation. And what I actually gave to everyone on, I believe was it one Thursday? On Thursday, we traded the 2-1-2 reversal or continuation on Qs. I believe it was actually a reversal, my bad. We traded the 2-1-2 reversal right here. And you can see, goes in force instantly with a tight stop and rips. And then what happens in the afternoon? It's like, well, full time frame continuity, you're not changing that daily magnitude, or you're not changing that daily continuity. So we go inside. You can see 2 down hammer. Boom. This Sarah caught this later in the day after I streamed. Beautiful. And now it's like, why is this all a choppy mess? Well, you go on the month on cues. Like they did what they're supposed to. They took out these highs. So now we just pause. Why do we pause? We went 2 up on the week, so they could go potential 3, or they can just go continuation. That's fine. If we go to SPY, that one's inside on the week, stuck. DIA, inside on the week, stuck. IWM, closer to going 2 up, so that one's another one to watch. So Qs and IWM, they're the stronger ones. And we know DIA might be a weaker one. I actually like this one tomorrow if it can go 2-2 reversal back up here. And reason being is the same reason that we liked the SPY last week, is because you'll have weekly reversal on the week, 3-1-2, and potentially you could reach up here, but you'd have to change a lot of continuity for that to happen. And for those that are ICT people that are confused, we can explain it the same way with ICT. It's all very similar. And that's the thing that I've realized, because this is something, I guess we'll talk about it. This is something that, what's his face brought up. Yeah, he still hasn't responded. But the guy who kind of like came after me on Twitter earlier, he said, using different trading strategies over whatever period of time looks sketchy. It's like, okay, Strat and ICT, I've since the beginning, when ICT is like just becoming a thing, or just market structures trading in general, I was like, okay, well, is Strat the end all be all? Maybe. I'm still young. I've got many years ahead of me. There's zero harm, zero, in at least just learning about it. And that's something I've always loved, is just learning about new things and trying out new things. Something I've always loved. And in trading, that may be something that just isn't very healthy for most people. That's fine. But I'm lucky that I can kind of switch between, because it's like I traded the Strat for over a year and I didn't do terribly with that. And ICT came around and was like, okay, we'll look into it. And I traded futures for about a year, and I've kind of just decided I'll stick with Strat. We can do it on futures too. And ICT stuff, the order blocks and the fair value gaps, it's all still beneficial. We still use it. We still talk about it. But the Strat and the time frame continuity and the broadening formations, that gives you your draw and your liquidity. It gives you entries that you may not get with ICT. And then on top of that, it's like, well, you can still take an order block entry in the direction of the broadening formation. It's the same shit, right? It's like the same way that if we're looking at DIA, it's like, well, is this a market structure shift? Is this an order block on the week that potentially is being disrespected? It's like, sure. On the daily, it's a 2-2 reversal. It's the same thing. And what happens on the week? Maybe we go compound inside bar 3-1 to the downside under here if we're falling back in this. Or maybe we take a 2-2 reversal on the day. But like, you can frame it any way you want. But at the end of the day, it's all going to be the same stuff. And this is something I really wanted to touch on. I didn't expect to do it here, but T-Trades made a video about the second day play. And if you have a wandering eye, you know anything about the strat, I believe it's called the second day play. Admittedly, I didn't watch the video, but I know T-Trades, and we've talked about it, about the stuff that he's doing, and I know what he's doing. So, second day play, it's like if we're looking at, I believe we're looking at ES, it's like we take out buy side liquidity. What is that? Top of the Broadening formation. Done. We're on the same page. What is that? Shooter candle. Second day play. Looking for a fair value gap, an order block, a BPR in premium on this day right here. What's the same thing as that? Looking for a daily 2-2 reversal down here to target this low. Or if we're looking at ICTs, like what do we target? The same fucking low. Fair value gap and discount. It's like 2-2 reversal magnitude, ICT, fair value gap. It's all the same. It's extremely similar. And that's just one thing. Like I hope if you've seen T-Trade's video, if you haven't, I suggest you go and watch it. It's like one of his more recent ones. It's the same stuff at the end of the day. It's just a different way of gaining an entry into it. And if we go to this daily, it's like, okay, let's frame it out. Okay, there's fair value gap and premium up here. Let's see what the hour looks like. You have a breaker block. So I'm guessing they're going to use that breaker block. I would not be surprised. You can see the broadening formation. And then what does the broadening formation do? Expands in the direction of time frame continuity, which is where your daily trigger sits. It's all the same. So this would be my breaker block. And then you have fair value gap right here. So I would be looking, if I was just ICT specifically, I'd be looking up here to short into that daily trigger for the SPY. Now that they created liquidity at the fair value gap, maybe we go and take that out instead. It's like, okay, what is this on the smaller time frame? Well, what do we know about broadening formations? Let's draw from right to left quickly. Here's your high. What did it take out? Didn't take out that high. Took out this high. Boom. What does that also give you? It's like, well, here's your equal highs on the 1 minute. It's like, it's the same thing at the end of the day. Here's your broadening formation. Here's your 3, 2 down in green, inside bar, 2 up reversal off the bottom of the try. That creates the low of it. And we can't draw to this low because we didn't take it out. Or did we take it out? We did take it out. So we'll draw from here to here. Done. So compound inside bar stuck. Now took out the lows. Boom. Big, nice move. Now, if we go 2-2 reversal up here, anywhere off the top of this try, why wouldn't we want to short it? Exactly. It's the same thing. 2-2 reversal. We'll see. Does it work? Potentially it stops out if it goes 2-2-2. Did not go 2-2-2. This would be inside. Double inside. Stuck. Potentially TTO to set up a rev strat. All right, so this one failed. 2-2 reversal here with the stop here. That's done. Failed. Did not work. Takes out this high now. 3, 2 up. Is that a shooter? Nope. 2-2 reversal. 15er. It's getting stuck. Let's see if the hourlies can give us something. 3-1 or 2-1-2 to the upside. All right. Yeah, we could be looking at literally any time frame. 30 hour. It really doesn't matter. I'll go on the hour. I like the hour. All right, shooter hour actionable signal with clustered pivots below. Does it go 2-2? Looks like it went, failed. So another stop out. That's perfectly fine. More 3s. This is a mess. Oh, it's because I'm so stupid. I'm so sorry. We're looking at like the overnight Asia session. We'll go back. So if we're looking at New York session, that makes it a lot easier to understand. I was so curious. I was like, why the heck are we getting this whippy price action? But New York session's coming up. So what, 2? But you can see 3, so more broadening formation. We had all this choppy mess, which that will chop you up. That's my bad. I'd be drawing out the try off this 3, which 3-2 off the top of the try, maybe. Ideally, I'd want to see us start expanding below these lows. So now we've closed below those lows. And the 3-2 goes and forced to the downside. Can we change daily TTO? So now, direction, you can see we've displaced through those lows. So strat and ICT, it doesn't really matter. Same thing, potential 2-2 back down, take out low a day. And daily open sits right around here. So if we open the day, you can see daily open will mark it out. I was thinking we were looking at SPY and not ES. And I was like, why the heck is this so choppy? So 2-2 reversal, bottom of this try, finally, taking out the lows. And now we're getting close to New York. So New York is where we want to see people get stopped out. $7.30. You can see 3-1-2 goes to its target. And they just give a big old 3. Let me get back over here. Haha, there it is. These numbers are driving me crazy. So, God, I'm just like so confused here. Get me back over here. So, back to the 60. what, 6 a.m., 7 a.m., 8 a.m. This 8:30 CST. Harmonic trading hours. I'm getting really lost in the sauce here. Reason being, the way that we normally frame this out, I don't trade Asia, so I have no clue. But the way we normally frame this out is we'll open up futures, and then we go to the SPY and wait for the 8:30 open, because I don't trade pre-market 90% of the time, or almost 100% of the time, actually. So is this 8:30 CST, or is this 8:30 New York? Okay, this is Chicago. So this is 8:30 CST. So this would be your kill zone. That's what we're looking for. So you can see it goes potential 3. Fivers, what, set up inside and down. And inside and down fiver does end up working out, which is where on the SPY, what we normally do off the open. Let me get back over here. We normally frame futures and then go to the daily, which you can see shooter day SPY. So if we're going to daily open on SPY here, can we get the fiver? Yeah, here it is. So off the open, this is so much easier to frame. Apologies. But if we're looking at ES, SPY with its 2-2 reversal, small little Broadening formation, you can see it goes and trades down if we're looking from all-time high, all-time lows, new lows, goes and makes the new lows. Gaps down on the day, here it is. As long as we are below that daily open, we are selling on the day, and we have all day to sell. Which, you can see we do have shooter fiver here, which gets difficult to try and get into. You get the potential 3 in the direction of daily magnitude. Later in it, here's your inside fiver. And that's after all of that sell, which, again, you can get stopped out of this. You can enter on this potential 3. You have to be quick, though. This is that easiest entry, though, and then it runs out daily magnitude. On ES, it did go and make that lower high where I wanted to see it, but that was a complete mess because of Asia. I thought they made the lower high during New York. But if we go and play through it now, this would be one that kind of chops me up a little bit if I'm looking only at that hour time frame because of that low volatility. You can see they're above daily open. They TTO, make a 3, make another 3, and that's just where when you have low volatility going into higher volatility, if you're on the higher time frames, it will chop you up, which is exactly what we saw. And that's not, it's kind of embarrassing, but I'll leave it there. I'm fine with that. But once we start seeing it actually displace through here and getting to the time frame I actually do trade, you can see we had the hourly breaker block over here. This smaller time frame breaker block would be the ideal scenario, which once you get to 8:30, you can see they tank it off. But man, that was rough. Yeah, no, I'm I'm willing to admit it's confusing, and especially Asia. I don't like the low volatility, and I guess this can be a learning moment. When you're trading a strat, if you're trading low volatility, if you're not seeing big candles, then that's where it's like 2-stop rule done, and that's why I've exclaimed that on Twitter a couple times and talked about it. But if I get stopped out more than a couple times on one stock, either the signal's not working, which means I shouldn't be trading it, or it's stuck inside somewhere that I didn't recognize, or I might have had my analysis in the higher time frame be wrong, or it's just not moving, right? It's like it can all be lined up perfectly and it doesn't move, and that will completely mess you up, which we can totally see that right here. So I will leave that in. I'm fine with that. That is where the struggle occurs. But that's also where higher time frames and recognizing that the higher time frames disagreeing won't let you try and trade short on those lower time frames if they're still green, which if we're looking at it like that. I believe it gets confusing that broadening formations are in different time frames. If I'm just trying to trade, so this is, I guess, this is the difference between ES or between ICT and Strat. If I'm trying to sit here on the 15er just to grab a one single 15er 2-2 reversal on Strat and have it work, then I can't just sit here on the lower time frame and be like, okay, we're above the daily open, but I want to take this 2-2 reversal here, and I want to take this inside down here, and I want to take this shooter here and expect it to make new lows and change daily continuity. And I want to take this 2-2 reversal 15er here, not knowing that London opens right here or the 4-hour open is right here. Can't do that. And that's why ICT is so important it's so important to incorporate time with it, which if you come in here and kind of like what we were looking at, if you come in here and you try and take inside and down and 2-2 and what is this hourly reversal signal right here, and you're doing it all against higher time frames being green, which if I was actually going to be trading Asia, we'd go like this. Yeah. So if the hourly opens right here and we short that hour, anticipating this PMG to occur, if that hour goes green, I'm no longer participating. I would never keep a stop that high. And if we're looking at this hourly breaker block, it's like your stops sit up here unless you wait for this to get ran out inside it, which that's where you can see they run it out and then go 2-2 reversal. I need to have those higher time frames in agreement. And if that hour goes 2-2 and goes green, can't hold on to that. If this hour goes potential 3 into a previous 3, it's like we would be all over that below here. But that's at 2 in the morning. I'm not used to that. And you can see it comparatively, these candles compared to these ones. 5 points compared to 16. It's a third of the volatility. I think there's an issue with how easily you see broadening formations. I believe that it's confusing that broadening formations are on different time frames. I guess. I don't know. I want to see. We have Dish into tomorrow. We're running low on time. We got about 23 minutes. At this point, nothing surprises me. We can talk about what we're looking at going into tomorrow. I have a sticky note right above my monitor, so I keep glancing at it. But what, into tomorrow? So, talked about YM. If we're looking at YM on the day, can this thing go 2-2 reversal above here? That's the question. If we can stay in force there, we look for this and then weekly magnitude. And above that first weekly target, potentially up here, but that's kind of a stretch in my opinion. If we go to the week, you can see your rev strap week above right here. So if we're looking for a rev strat week back up to here, you'd have to really prove it to me if with the daily tomorrow. But if we're going to YM, I like Dish. It's going to be a part of the Dow Jones stuff. Why do I like Dish? Kind of like we talked about with the grinding against the highs and then buying the reversal back up. You can see this one's grinding into the inside. It's technically stuck from here to here, right? But we take that inside week up over these highs here. So this now, grind, 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 failed move to the downside. That gets people trapped short. We want a long above that daily hammer trigger as long as we can see YM doing something similar. And your rev strat magnitude is to take out that weekly trigger. And we have intermediary target and weekly target sitting up here. So if we go from day to week, everything agrees. So this would be weekly through onto the upside, target, magnitude on the week. And this is against continuity, so as long as we can change the week continuity green, if we close above that, we can swing for magnitude. If we can't do that, can't swing. 15-minute broadening formation and a 4-hour broadening formation. It's the same thing, but the 4 hour is going to be just the higher time frame. So if we're looking at dish, it's like this would be the 4-hour try. So just so we're clear, if we're looking at the 4-hour try, it's like, well, new high, new low, 2-2 reversal holds the gap up, and then you can see a new high, inside and down, new low. It doesn't change anything. The only thing is the 15-minute try on the lower time frame has to expand to wherever the higher time frame is going, which is why, and as Rob says, don't get sucked into the lower time frame vortex, because when that happens, you get exactly what we did on the futures. Is if we're looking at a 15-minute on the futures, if we're looking at, let's go in here. Let's find like a choppy mess. It's like, okay, if we're looking at the futures, we're zoomed in here. It's like, well, here's your higher high, here's your lower low. It's like, oh, nice. New low gets made. Let's try and go long. We'll just kind of zoom out a little bit. It's like, let's try and go long because here's our try. It's right here. Right? It's like, boom, beautiful broadening formation. Here's your hammer 212 rev strat with magnitude up here. Why does that not work? Because if we zoom out, they're gunning for something else, right? They're very obviously in the higher time frames not doing that. So if we're looking at a 15-minute, I believe we were looking at like a 5. But let's say that 5, let's say we're comparing between like the 5 and the 4 hour or something. If we're looking at the 5-minute, that try looks like it wants to reverse with that rev strat on that lower time frame. Now if we go to the 4 hour, where's the 4 hour magnitude if it gets to the bottom of that try? This 4 hour goes 2-2 reversal and goes to its magnitude. It's like, you need to know that, because if you go on the 5-minute, was it the 15? Yeah, so if we go back to the 15-minute, if you're trying to take this, even though we're triggering that 4 hour down, when that fails, that hurts a lot because it triggered the 4 hour and now it goes to 4 hour magnitude, and you can see they're trying to get this low here now. So understanding that, yes, those lower time frames will expand into those higher time frames, which you can see the time frame continuity also points down. So that's really the difference. You get the lower time frame expansions in the direction the higher time frame broadening formation goes, which is simply put, understanding where your higher time frame magnitude is, because the magnitudes will tell you where the try is going to be. Rob did a great job of doing that, because this 4 hour 2-2 reversal, where's the broadening formation in that? It's like, well, when that thing hits magnitude, these 2 bars go outside of this bar. It's like, that's why that's magnitude right down there. It has to be, because this is compound outside bar to this. And that's why the rev strat is the way it is, because if you're looking at the box setup or the rev strat, inside goes up. If this goes 2-2 right here, they're trying to take out the other side of the range to go compound outside bar, which you can see they go. All of these bars go outside of this stuff here. But on a smaller time frame, if we go to 15-minute over here, you can see there's a smaller time frame try, but it expands. It goes 3-2. If it's like a 5. Expands. There's no catch in the bottom of that try because it's not going to the bottom of that try. It's going to the bottom of the bigger one. And that's where the box setup comes from. It's like, this is a really pretty one, actually. See, all gets stuck in here. And then 225 to lose those highs. CVS, yeah, so that's what I was going to get to. So it's really funny. If you're looking at my post-it note, CVS is right under dish. I have day to week for the 122. So here's another one. This is for tomorrow. This is literally what we're going to be trading. You have weekly 3122. Why are we looking at this even though it's time frame continuity down? Because where's the try? 2-2 reversal on the year, 2-2 reversal magnitude hit, exhaustion risk. And now we're coming into the end of the month. What can happen on the month if we come back in? Potentially, I don't know if this is a 1-2-2. Potentially they go hammer counter shooter month. That would make a lot of sense after hitting exhaustion risk on the year. So how does that happen? That happens with a daily hammer signal. After, you can see big 2-2 reversal up. They failed to do anything with this hammer. They stop out those guys. Now, if this hammer goes in force tomorrow, anything that got shortened to Monday, they're screwed on turnaround Tuesday. And if we look up and left, we have a pivot here. So we can take out all these guys up here. And when we do that, we put the week in force right above that daily trigger. So we have daily trigger, weekly target 1, and then potentially weekly target 2. And that's, again, if we go to DIA, we want things that are trading like the Dow Jones, because if Dow Jones goes 2-2 tomorrow, that's what will make all these things go in force. So we have CVS, we have Dish as well, so similar. And DIA was under that. And we have GS. This one didn't close quite as strong as I would have preferred. But potential 3-2-2 hammer. What can that do? That would just go back up into the week. The only reason I'm looking at this one is because it's part of DIA. And it's part of those stocks that have daily magnitude and hammer signals. So if it goes in force, potentially we trade it. It's lower on my list. If things reverse tomorrow, if the SPY and the Qs just want to come back in, look at Meta. What do we know about Meta? Let's go on the year. They are bright green, but they're inside. So halfway through the year, we're inside. We couldn't take that out, 340, 316, but it's unlikely. Go to a quarterly. What did the quarterly do? 2-2 reversal hammer, magnitude hit. Second magnitude hit. That's last year's highs. Probably can't target that. You could also call this like, that's your breaker block down here. This is your fair value gap. It's like, it's all the same thing. Consider it exhausted. So now we go to a little smaller time frame. What's the day going to do? Tomorrow's turnaround Tuesday. What do stocks like to do on turnaround Tuesday? They like to turn around. Meta, potential shooter on the day with the PMG to the downside. I would want to know about that one for sure. And this one has not made a new low until this low here. So we go down to the week, potential outside week back in. Meta. That's if things want to fail tomorrow and come back through. And then the last one on my list is Airbnb right here. Reason being is because it just has range. You can see this thing. Where is it? First of all, where's our try? It's stuck here all the way left. Low, all the way left. All-time low, all-time high. Takes all that out. So this is outside bar of all that stuff. And now this is all inside. It was, you can see, compound inside bar to this bar until it took out this low. But potentially weekly goes 3-2-2. That would give us magnitude to go and take out this stuff. If you wanted to, you could also mark out the weekly open. And if we go to the day, you can see this is just the gap. So if we're looking for the gap fill, I'd want to keep this gap on my chart to understand that. We have exhaustion risk right here potentially. So we can go 2-2 here. If the week's in force, love it. If it can continue to stay green, go back up there. But we want to be careful if we hit exhaustion risk at 112.34 and can't fill this gap. So Airbnb would be one over yesterday's highs to trigger the week there. And then potentially exhaustion risk, just mark it out in like orange. Why not? So this would be weekly. And I think I had a couple more. Let's see. So similar, yeah, so looking into tomorrow, another couple. We had Cat. That one's more doji, so that has a lot of room to go. And the reason we look for those hammers is because it tells us that traded all the way down here, so there's people short from down here all the way back up, and they're underwater. If we take out the high of that candle, then we look for them to get stopped out, which here's a good example. You can see they all get stopped out and just big old candle up. But now with this doji, similar thing to the hammer where you have people trapped on either side, but which side do we take out? We're right in the dead center. So we need to see which side of the range gets taken out there. But Cat, you're going to see it looks similar to BA, which also looks similar to HON, which also looks similar to Dish, which looks similar to AIG. You can see stopping out with a hammer. Similar to EXPE, which I have underlined. That one's inside. Why do I have it underlined? Because if we draw right to left, this is our try. This is where you potentially expand on the try. Why do I have EXP underlined? You can notice if we go back and look at any of those, they actually took out previous day low. If we go to BA, took out previous day low. HLN took out previous day low. Dish took out previous day low. Now if we go to EXPE, why is this so important? It didn't. What does that tell us? That means there's natural buyers in this one because it didn't take out those lows. It's stronger than the rest for sure. So if it was stronger on the day that everything was weak, if everything goes strong, we'd want it to be stronger than everything else that was weak the day prior. So looking at EXPE, would want to see it, but it's all going to depend on these YM futures, which, what are they doing right now? You can see shooter, boom, takes it out. You can see the broadening formation goes from here to here. They did tap the bottom of the try, but can we expect it up to this high? No. Why? Because this is compound inside bar from this range. So until we actually take out either side of the range, this is consolidation by definition. And if we're looking at YM right now, it actually doesn't look quite that bullish because we have compound inside bar range being stuck. We made new highs and we reversed. Now, time frame continuity, do we have magnitude to actually go lower? Inside on the 4 hour and hourly shooter with no magnitude. So probably still going to chop. And given that, I wouldn't want to be trading this, obviously, since it's a chop shop being stuck from here to here. But given that, I'm not going to say it's going down, but it's definitely not going up with that shooter hour in force. This is just kind of where I wouldn't want to play. And the reason being is you're still inside weak. We want to see it go in force on the day above there, and we'd want to see that weak then trigger above there. If those things don't happen, then there's no trade for me. Unless, the week goes down, which even then there's no actual signal. And to end this off, we have about 10 more minutes. We will see, so CVS, Patrick was talking about that one. Let's see, SIG. SIG inside day. So this is really cool. Second day play. It's just T2 reversal to magnitude. Go to the week. Potential shooter rev strap week. Nice. Love the look of it, Patrick. Doing good so far. So we are inside. And how do we notice that? It's like, well, if we're trying to draw the broadening formation, we're zooming out. It's like, well, did that high take out everything? It's like, no, this one took out everything, right? So we're stuck inside. This is all stuck chop shop. But does that matter for the magnitude we're looking for? No. We just draw from right to left. And I'd say this low to here. And if we go to the day, see this high, we all take out from here to here. No subjectivity on that broadening formation. Can you draw it to that low? You can. I would prefer to draw it to this low. What did that take out? Took out that stuff. So the reason I'd prefer to draw it to that low is because this high and this low, this is all outside bar of everything to the left over here. As long as it's not if we go like that. It's like from all this price action, made a new high. And this is what you kind of have to do when you're stuck inside in that hard time frame. You just have to frame it that way. But now we have the weekly magnitude. Where would that put us if this week goes in force here? That'd put us down here, which would put us right at the lows of the try. That's something we'd want to know about. If we go on the month, it does have monthly magnitude too, but it's late in the month, so they really have to read it up. You have continuity, so that's good. And the month is in force still, so that's also good. So going to tomorrow, yeah, potentially inside day and down right here. This would trigger the week. This would be weekly magnitude. So if we go inside day and down, Patrick, you're good on SIG. PMG not too far from triggering the month. What is that? Oh, MPC. Yeah, Sarah said the same thing. Stuck. MPC. Okay, I don't hate this one either. This one you can see similar problems. So this is why we're going through the members charts right now. But this is the stuff you want to be careful of, members. You're still stuck in this, so be careful. But you can see swing high, we took that out. Now we have inside day shooter and pivot all clustered together. I would prefer to see this high or low taken out before taking actionable signals. Just personally. Reason being is why we're a lot closer to going rev strat on the week. So you're going to be inside week the whole time, which just means you can take that, but you need to see it go. And if we go on the month, they've really been selling this one, 2-2 reversal on the month. You can see this is compound inside bar stuck. These two bars here. They take out the highs of it, which takes out the high of that mother bar. Then they go rev strat, take out the lows. So you're coming off of some exhaustion risk, but really red on the month, so maybe they can go and close it out more red. You're just stuck. You really need to see it go. If that daily trigger doesn't go right away, I would not want to hold on to that for sure. Visa, more things that are just stuck. You can see Visa on the month, TTO'd, so monthly continuity, you're not really that red there. No, Chuck was looking at the inside week and up, it just didn't go. Yeah, so that one's stuck, double inside week. You can see though, similar to what we were just looking at on the other one, daily reversal, you have all the clustered pivots, it's just got to go. If it doesn't go, it's not really doing much. And if we're looking at the broadening formation on this one, if we're looking at all time, it's like, well, we're stuck inside all of this. We have slightly higher high here, and lower low here. We could do it to here, doesn't really matter. But now this needs to really red up, because if not, you're going to be double inside week stuck, which we need under last week's low if we're going to do anything. IBM. Yeah, so IBM, this is the example of not being stuck. Thank you. You can see new low gets made, hammer, boom, magnitude hit. Once it does that, it's like, well, where's the new highs to be made? Potentially up here. Why? Potential outside month. When we're above monthly open and 2 down, already hit its magnitude, exhaustion risk, we'd look for there. If we zoom out on the higher time frame, doesn't have much agreeance there, and you can see IBM, great example of also being stuck, but going from stuck to not stuck anymore. Makes new highs and then 2-2 reversal back in. Now monthly continuity, we have a month of potential buying, but if they're going to go anywhere, potentially they go and try and take out those lows again. You go to the really high time frame, you can see where those want to go, and you can see on the year stuck. But what does the year have? 1, consolidation stuck. 2, up, takes out the highs, no longer stuck. 2, rev strat. So if IBM can get under last year's lows, then that thing can go and expand out that range. And if we go to the week, where would the TTO be? Where would we stop some people out? High of this broadening formation if we go on the day. So this is where you can kind of frame like, oh, ICT, like drawing where things may go. It's like, well, if IBM can stay the way it's going, I'd want to see a higher low form after a TTO. Take out that stuff and then try and expand in the direction of that higher time frame. Or if we go to the, let's do like the year. Like here's your 12-month continuity. It's like that's all red. So this can go up for the month, but if they start coming back in and going red on that month, it's like we want to see this expand to take out that yearly trigger and get out of this. And that's where, if you've ever seen me doodle on a chart, it's the same shit. It's the same stuff at the end of the day, and then look for that yearly magnitude, which you can see gets stuck between here. Look at this small try turns into a big try, and then here's a higher low, and then they get stuck in that. Then they make another big try where they make new highs and new lows, and then they finally go 2 up and take out this stuff, which is where we can get potentially that big move back down because we're no longer stuck, which is, I really like that yearly time frame actually shows what we're looking for there with that potential rev strat. But let's go look at like the big names. So at Microsoft, it's like when we're looking at something like this, can they continue buying it like that? Yes. But what happens if we take out a previous day low? They're going to get creamed. Why? It's like once everyone who wants to buy has bought, then everyone has to sell, right? It's like, well, you're going to want to stop out a ton of these guys before going any further because nothing goes straight up. Everything wants to stop out, or TTO, or whatever you may want to call it. And similarly, let's see it. You can see when this grinds up into the highs, and then they got to stop a ton of people out, and then that was earnings gap and go. But that's what started all of this. And if we go to a higher time frame, you can see the week just grind, gap, stop everyone out, go potential 3, and then rip, which occurred in the overnight with the news, but just an example. But that being said, it's like we'll end off with this. What are we looking at on the indices? This is my broadening information for the indexes. The only thing to note here is similarly from this high to this low, you can see this all is getting stuck inside. That's why we're in a chop shop alongside being inside here. IBM daily 7 up days with an inside day. Yeah. It's going to be up to turnaround Tuesday. Can they go 2-2? Or 2-1-2? But leave off with this. We got ES. I want to see those highs get taken out eventually. They may want a TTO. We'll have to see. If we look at the daily right now, what did they do? They gapped it down, stopped some people out. Now they're trying to 2-2 reversal back in the direction of the month, the week, the day, and the year. Can they do that? Potentially. We just need to see, can they get above those previous day highs? And if we can do that, we still want to see this high taken out, which is what? 4327.50. And if we go to Qs, they already did it. So if we're looking at Qs, it's like they already did it. We'll see if they get exhausted. If not, that month is enforced till the end of the month, as long as that week stays green. ICT, it's like, well, where would I want to be targeting? It's like, here's monthly order block. That's what I would want to be targeting, more than likely. And above that, breaker block on top of that order block. So here's 2 levels that potentially you could be looking at. That's just how you get the levels, right? Similarly, if we're just looking at previous highs, it all ends up being the same, where you TTO and then you go after grinding and getting stuck. But that being said, we will see what the indexes can do for us tomorrow. It's going to be up to SPY's potential inside day and continuation, or maybe they go rev strat. If we look at our daily, the magnitude's very tiny. So if we gap up there, let's say ES does its reversal and we start gapping up here, maybe by even a couple pennies, they can just rip it outside if they want. And inside day is because these lows are equal, so I would call that a potential inside day, unless, yeah, no, they're equal. I would call that an inside day. It's the closest you're going to get to going 2 on an inside day, but that's still inside, in my opinion. So that being said, we want to see what that daily candle can do tomorrow. Since it is turnaround Tuesday and we have no weekly bias here, we can't be strongly biased. So coming into tomorrow morning, what we're going to say is, hey, let them open. We will look for the 5ers. We'll look for the 15ers, 30s, and 60s as the day goes on. And we'll see. Can we go continuation into time for continuity? Or do they want to gap up and potentially just go 3, stop some more people out? Until the open tomorrow, I would suggest I'll probably have my thoughts posted on Twitter at the open or before the open, depending on what the futures overnight session looks like, which, again, we're already rejecting yesterday's highs. You can see sugar hour doesn't look that healthy, but the magnitude really just isn't there. And on the 4 hour, you're inside. So unless that stays nice and red, they're not really doing much. I wouldn't be trading the overnight session tonight. And until then, sorry, my voice is starting to go. I didn't have any water. Until then, hope you guys have a good night, and we'll see what we can get tomorrow.